You are on the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 250,000 reputation points. And what I love the most is sharing educational breakdowns to show you how you can be looking for the best trading opportunities in the market. So without further ado, let's go and see which is today's Forex pair that we need to break down. The pair that I want to speak about in today's video is AUDUSD. Now, why do I want to speak about AUDUSD? Because at the moment we're having quite interesting price action on it, and this pair is getting ready to provide to us a good trading opportunity. So as usual, I will be keeping the analysis as educational as possible, and I will be first speaking about the technical aspect of this market. We will then go and see what we have from an order flow perspective. So basically what hedge funds and the biggest speculators in the market are doing by checking the commitment of traders. And by the end of the video, by using the combination of our technical analysis and our order flow analysis, we will see where we have the highest probabilities for a nice trading opportunity on this pair. Now, starting from the monthly time frame, what we can see is that the market has just provided a nice impulse to the upside, followed by this correction. Now, generally speaking, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market has just retraced inside of the zone, which is in between the 0.382 and 50% of the Fibonacci taken on the impulse, which is a quite strong confluence of support zone that we did expect the market to test before a potential rejection to the upside. And in fact, we can see that that is exactly what the market is currently doing. So here on the monthly, we can expect the market to provide more continuation to the upside. So on the monthly, we have a bullish outlook. Let's go down on the weekly time frame and see what we have from a weekly perspective. Now here on the weekly, the price action and pattern that the market has been printing is quite clear. We first have a move to the downside, retracement, lower low, and equal high. Now when you see an impulse, correction, lower low and equal high, what you expect after that is for the market to provide a correction before the continuation to the upside for the creation of this inverted head and shoulders. So here in the weekly time frame, we do expect the market to provide a little bit a deeper correction before the continuation to the upside. Basically, for the market to test this very strong demanded zone that the market provided when it created this rejection to the upside, we expect the market to test it and then reject it to the upside, and for the market to provide this inverted head and shoulders. Now, generally speaking, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, what we can see is that this zone is the confluence of support coming from the demand that we have already identified with a 50% and 0.618 golden ratio of the Fibonacci taken on this a weekly impulse. So all this zone is a strong confluence of support and demand that, as I have just explained, we expect the market to test before a potential rejection to the upside. Just a quick reminder, for more educational breakdowns, make sure you subscribe to the channel and hit the bell. Going down on the daily time frame, what do we see? Now here on the daily, I had spoken about AUDUSD quite a few times in the past. I spoke about AUDUSD after this overextended W formation. From here, I made a full breakdown explaining all the reasons for which we expected the market to provide a correction, at least to the 0.382 of the Fibonacci taken on the daily impulse, and in fact, that is exactly what the market did. Then we had the creation of this W formation, and from here, I made another breakdown explaining all the reasons for which we expected the market to provide this correction to complete the W formation at the neckline. And in fact, that is exactly what the market did. And by the way, I will link these two previous analyses in the description so you can go and check them out for further reference and more free education. Now, here on the daily, since we are now creating a nice M pattern, we can definitely be looking for a completion at the neckline. So monthly, weekly, and daily are all combining for a potential longing opportunity, since clearly the market is here providing an M pattern, which could easily become an overextended M pattern, which would be even better because we would have a higher risk to reward to the completion of the pattern. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are currently doing in the market, what we can see is that with the last reports on the AUD, and keep in mind that all currencies on the spot are traded against the USD. So if you check the data for the AUD, you are actually already checking AUD USD. What we can see is that with the last report, net positions have been decreasing. In fact, we went from having 12.2k net positions all the way down to having a negative minus 1.4k net positions. However, even though net positions are decreasing, and we went from having more longs than shorts from an institutional perspective to having more shorts than longs, with the last report, we do see 3k longs getting added. So hedge funds are shifting their positioning to the negative side, and in fact, AUDUSD is creating a move to the downside. However, we already see longs that are starting to get added again, meaning that this move to the downside could easily be an only short-term move to the downside, as we already wanted to see from a technical perspective, and then the market will start a move to the upside. So we do have a quite nice longing opportunity here on AUDUSD, at least for the completion of the M pattern on the daily to the upside and at the neckline. So how we will be approaching this potential longing opportunity with students? Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional perspective. But when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So with students, what we will be doing is monitoring price action from a 4-hour perspective and lower during this move to the downside. And we will be waiting for the market to shift from an intraday bearish market as we have right now, and as we will have, to a 4-hour and lower bullish market. And only if the market will shift from an intraday bearish to an intraday bullish market, at that point, we will be adding AUDUSD to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to complete the pattern at the neckline, which is the previous support, now turn resistance here from a daily perspective. If you enjoyed the video, make sure that you smash that like button and comment below. Also, you can go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all my rule-based strategies. Then you trade the strategies with me. In fact, every day I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits. And you also get a Q&A session every day in which I answer all your questions. So it's a very complete program. I really suggest that you go and check it out, and I will see you in it.